Hi, I'm Phil Grande of Phil's Gang syndicated radio show across the country. I'm going to share with you, as I share with my gang members and my audience, why the stock market crash has already started in January. Crashes just don't happen. It takes a long time for a stock market to crash because the reason markets crash is due to inflation. At the end of this little seminar, you're going to have the understanding of bubbles, understanding of quantitative easing, and with this knowledge, you're going to make more money than 80% of your friends and neighbors. Let's begin. Okay, bubbles. This is a tech bubble, rally, crash. Housing bubble, rally, crash. Quantitative easing bubble, rally, and it too will crash. It's impossible for it not to crash because these are bubbles. What creates a bubble? What makes them crash? The tech bubble. A bubble is a propping up of a market because there's not enough high-paying jobs, not enough savings. Remember, you got to have savings and you got to have high-paying jobs to create a strong economy and a strong market so it won't pop and give it all back. That's not what's happening. After they moved all the jobs overseas, so all our high-paying jobs overseas, and because we had low-paying jobs now and so many part-time jobs, in order to get the stock market to go up, because people don't have money, they're not buying stuff, to get the price of these company stocks up, they have to create these situations that we call fake wealth effect. Let's begin. Okay, the tech bubble. They printed money. They wanted the market to rally, create a market in a tech bubble. It was perfect timing because they shifted all the people. The smokestack factories closed down. All the people were shipped to overseas. All the high-paying jobs, and tech was just coming in. Just coming in at the same time that the smokestack industry was leaving, so the timing was perfect. The sun, the moon, the stars, everything was lining up absolutely perfect. But they decided to ramp this thing up. They want to do it very quickly. They said, let's create a bubble. So what they do to create a bubble is they always, one, print money. And when they print money, they gave this money to big hedge funds for them to go out and participate in the tech boom. And that's what they did. Very few people in Main Street were involved in the tech boom. This was mostly all of hedge funds. It rallied, and then it stopped dead. And when it stops dead, it decelerates. But what makes that stop immediately is inflation. Remember, it's inflation, the creating of money that creates inflation. And they lie to us and tell us there's no inflation when there is. And the problem is when these rallies stop is when inflation abruptly hits and people aren't warned. If they warned there was inflation through the printing of money to get to the hedge fund so they could buy stocks and push this thing up, if they warned people prices were going to go up, there would be no sudden impact. But when you get that sudden impact, and everybody's surprised, panic sets in. What happens? All the buying stops. When buying stops, people get laid off. They stop buying stuff. When they stop buying, that's when deflation comes in. Prices drop. Let's take the housing bubble. When that happened, instead of Bush being smart and saying, okay, let's go into a recession. This way, we will clean everybody's balance sheets up, the hedge funds' balance sheets up, the government's balance sheets up. We'll get rid of all the debt, tighten our belt, and then we'll come out of that recession with an economic growth of 5 to 6% that will create 400,000 jobs a month. Instead, he decided not to go into a recession. He decided let's make another bubble, and we'll create a fake wealth effect. We'll make people think they're wealthier than they are. What we'll do is drop interest rates for a house down to very, very low rates. But the most important thing, let's make sure we drop all the lending requirements that anybody can buy a house. This way, people will refinance their homes, and with all that money, they'll go spend, and that's how the stock market will go up. $280 billion was refinanced in homes. They went and spent, and sure enough, the market went up. But soon, it stopped. Why? Because inflation abruptly hit with no warning. Oil was at $150 a barrel. everything stopped. The buying stopped. People were laid off. And then prices started to deflate. So it's that, remember, it's that surprise. It's that inflation, that surge of inflation. It's that surge of inflation that hits. That's what causes the bubbles to break. If they told us the truth that prices were going up, people would adjust and there'd be no shock effect. And then people wouldn't panic and this wouldn't happen. But they lie and they say there's no inflation in printing money. And when they do that, and you get that sudden shock, there's the problem, that sudden shock right there. The panic sets in. So so always think about a bubble is it's the inflation impact. If they told us the truth as inflation was going up, this would never happen. We would adjust to higher prices. That means people wouldn't spend as much. They would tighten their belt. But by not doing that, by not telling the truth, then what they're doing is they're lying to people. And then that's when when you do that, you have to go into a recession so that you clean up your balance sheet. You get rid of your debt. See, with inflation, the idea is if you're square with people and tell them, hey, prices are going up, man, then people start budgeting. They don't spend as much. But when you don't tell them that, and it all of a sudden hurts when you get that sudden impact, it's very, very, very disruptive, and that's why you get the crashes. That's what we're waiting for now. We're waiting for that next crash, and we're going to get it, but it's got to be that inflation. So again, because they keep telling us there's no inflation on the way up, if they told us there was, people would adjust the way they live. They wouldn't spend as much. Their balance sheets would be fine, but by lying, people's balance sheets are overbloated. They have too much debt, and then as soon as that inflation hits, people stop buying, they get laid off, and then prices deflate. Now, Grande turned around, and he's in bad shape. Europe's in bad shape, and he came out and said, I am no longer going to loan banks overnight money on their money. In other words, every central bank, our central bank, the European Central Bank, they say to their bank, give us your money overnight, we'll pay you an interest. Grande turned around and said, no, I'm not going to do that. You're going to pay me because I want to force you to go in and loan to people because you're hoarding your money, you're not loaning. It will never work. Because the reason they're not loaning to people because there's not enough good credits. Here in the United States, the reason why we've got a bad economy because the banks aren't loaning to households or small businesses on Main Street. Instead, Bernanke said, now Yellen, look, I don't want you loaning to households. I don't want you loaning to businesses. There's not enough good credits. I will loan you money. You get at 0%, and then you loan it back to me, and I'll give you 3%. You see? That's why they're not loaning. So this next crash is going to be the same thing. It's going to be that sudden impact of inflation. So what do? Well, we got a warning already in January. Starting in January and February, the market started to go sideways right here. That was our warning. Institutions were taking their money out of this market. Buffett taking his money out. We never saw so much money coming out. And they're putting their money in other assets, especially bonds. That's why you see the bond market below 3%. Anytime the bond market is below 3%, usually the stock market goes up, but it hasn't been going up. Right? Because why? We've already gone up 190%, and you can see the difference and the difference in these bubbles. This is really extended. That's why I keep telling my gang members that for my S&P 500 group, I'm not going to put any more money in my pension fund by buying spiders, not until we get a correction. You shouldn't either. Right now, it's a stock buyer's market. If you stick with me and you buy individual stocks right now, you'll be fine. You'll make money. But you got to understand what is creating or why we're in this market crash already. Can we continue to go up? Yeah, we had this little surge now. And because of what Draghi did, but now it's all going to be up to Yellen on June 17th. If she says that she's going to raise rates and she's going to continue to take that $85 billion and bring it down to zero, and she's not going to do quantitative easing more, the market will collapse. If she says, no, I decided I'm not going to raise interest rates and I'm going to continue with QE, the stock market could go up again, another 20% a year each year for the next who knows how long until you get that abrupt inflation. See, it's the lying is the problem. There's no inflation. And I'll say this again. If they told us that the inflation was happening, then that we wouldn't have that abrupt surprise, and people wouldn't panic and they wouldn't sell. See, but that's not what they do. That is so sad. So they're telling us now there's no inflation. So we're going to the same thing that happened back here with the abrupt inflation, the same thing back here, same thing's going to happen here. Isn't that sad? But it's not really sad if you have the technology to deal with it, and we do, the PT2. With the PT2, it identifies for you in a simple color code of green and red when the institutions are pulling their money out. So you'll never be surprised by a crash or a rally because they'll simply change colors. That's why I recommend, if you want to take advantage of this stock market, if you want to take advantage of this rally, and remember, they're rigging it to the upside, don't be afraid. If you got the tool behind you, the PT2, when it turns from green to red, it's telling you, okay, stop. This could be the correction. Check it out. Go to my site, philsgang.com, and check out that beautiful PT2. It's so easy to navigate. It is so simple to use. Thousands of people use it, and you should too. Check it out. Phil's Gang PT2.
For more information, go to philsgang.com or give us a call at 877-600-GANG. 877-600-4264.